Okay, back to the recordings part two. I'm not sure where the 15 minutes ended, but let me start off. Here's a chart of the S&P 500. You see, I've shown this many times. I'm showing this again. So please take time to understand it. It's very simple. You got these channels here. You can see there's one channel in white, and then there is a large red downtrend channel. We broke out of the downtrend channel with on that 1,000 plus point rally on the Dow from the lows of the 1,800 level, right, on the S&P 500. This is where we are right now. Now, when you put the Darvas box over your charts, you start to see a pretty clean picture. You can see here that it's a very narrow bottleneck going on here. If this bottleneck breaks, the next level of engagement is going to be the 34-day moving average right here. Then you have the 50-day moving average. Once you start to see the lines, these particular lines start to curl down, and this is a 1-hour chart, obviously. You can see that. Once you start to see these lines, the 34 and the 50 days starting to curl down, then you know something's, there's trouble brewing ahead. At that point, the 1820 level, which is this particular channel top, comes into play. Lower end of that is 1740. We also have support at 1770, 1780. And then, of course, we have support here on the larger test of the downtrend line breakout, the red line, which is around the 1850 level. So that's only if you start to see these lines start to curl down. Now, the only way the 50 and the 34 are going to start to curl down is if we get a couple of really ugly red days, bringing us down like that. Period. In the meantime, a consolidation at this level, give or take, and it's more like a bull flag. Okay, it's more like a bull flag, just like that. Now, I highly recommend to every single member who have not taken advanced coaching sessions to sign up. I take my time away from my family during the weekends to go through these sessions, and individually, I've worked with people too during the weekdays. So if you really want to understand and maximize the power of the Clueless 8 trading chart, and this is not a sales pitch, this is the fact, okay? Everyone who's taken it, you can ask them directly, and you can read the testimonials. It takes 5 minutes. That explains what they have learned and why they've benefited. The market is not an exact science. It's a game of probabilities, and this volatile markets, it's certainly not a game of exact science. So if you really want to be somewhat intelligent in understanding, managing your trades, taking my suggestions, and at the same time managing your trades effectively in this type of volatile environment, you have to take the advanced group coaching sessions. End of story. It doesn't break anyone's pocket because I kept it purposely at some of the cheapest rates known to man. All right. And it comes to about $40 a session, and it runs for anywhere from an hour, well, definitively an hour, if not 2 hours. End of story. So that's it. The bottom line is we are still in that consolidation channel here. We'll see what happens today. Futures are down about 7. There's nothing cataclysmic happening around the world other than one very important news that which should break in the middle of the day and could spark a massive rally. And that is that James Cameron, the British Prime Minister, okay, I'm sorry, David Cameron. James Cameron is the director. David Cameron is in the midst of heavy negotiations to cut out a fantastic deal for Britain or United Kingdom with the EU regarding all kinds of EU policies. Brexit is a word you've seen being bandied around quite a bit. Simply means British exit. Britain's exit out of the EU. I don't think it's going to happen. If it does happen, expect a 1,000 point drop in the markets. It is not something that's taken lightly. Okay, it's pretty much like saying that California and the South are going to secede in the U.S. and form their own countries. So the bottom line is that we are in the midst of that. We have end of the week coming up next week. I don't want to keep on repeating myself. It's window dressing. It's going to be big pumping of the same old stock that go up 20, 30, $40 because the fund managers want to show those stocks on their portfolios. So a healthy pullback as we are seeing right now is extremely necessary for a sharp move into end of the month, which is pretty much next week. So that's all I got to say. 54.30. Let me show you quickly. Well, I showed you the oil on the previous chart. I still think that oil probably pulls back and retests the downtrend line at the 31 level right here. This thing is at 272. The entry price was around 230 and change. End of story. Okay. That's it. I don't want to go on and on. I've this selective stocks that we'd like a lot, and then again, you got to manage your trades. Just because Amazon is down $8 means nothing. in the middle of the day. It's simply you have to refer back to my chart, scroll down on the Twitter feed, and I will attempt to basically go ahead and populate my website under charts with all these charts, especially the recent ones from the net last month or so, so you guys can type it in and look at it. But it's all there on the Twitter feed. Do your homework. Good luck. Have a great weekend. Thank you for listening.